Hello and welcome to the Weekly Outlook. We've got a bit of a funny week ahead of us, really. We've got the FOMC meeting on Wednesday, which is really going to throw a bit of a spanner in the works. Now, as we've been sort of discussing this quite a lot, well, we've actually been discussing this since early June when the FOMC were expected to raise rates in July. Now, what we expect to happen is the US dollar could temporarily strengthen. Now, the reason we say temporarily is because the long positions on the US dollar at the moment are completely saturated. So, really, there's not that many more buyers left to come into the market, and what that really means for traders is they've got to find a way, to obviously to try and make some money out of the markets. Now, what we expect to happen is people to start selling off their long positions on the US dollar once they announce the rate hike very, very quickly. So we could see initial spikes down on the majority of pairs, and then the ones that are the strongest will probably start to buy back quite rapidly. Now this could happen on Aussie dollar, New Zealand dollar. The euro at the moment is showing quite a lot of safe haven flow going through there, and also since we had ECB not introduce further QE, that also caused a little bit of strength in the euro. We're already starting to see this happen across the board, which is why we've had weakness in the euro regardless of the data that's been coming out. We had good retail sales figure on Friday, which hasn't aided the US dollar rally at all. So really what we're starting to see is exactly that starting to happen already. Now, I'm not saying that we won't get a strengthening in the US dollar to start with. That is very, very possible. But I do feel that it will be short-lived, and then we're going to be looking at possible sell-offs on the US dollar after that sort of period. So it's going to be very tricky to sort of trade on the lead up to that announcement, which is going to make life a little bit hard for ourselves. So how we plan to trade next week really is going to be taking very short sort of scalping positions on the lead up with tight stop losses on the lead up to the FOMC meeting, and then looking to take trades after the initial rate hike once we start to see sellers and buyers sort of switching positions in the market. Okay, so on the lead up to that, we'll just have a quick look at what else we've got going on. And on over the weekend, we've actually got quite a bit of data coming out on China, which could affect the Australian dollar. Now, we have had the Aussie has seen some fairly sort of a bit of a sell-off this week due to the poor data coming from China, and over the weekend we've got more data coming out which could suggest again further weakness. We've got industrial production year on year on Saturday. We've got fixed asset investment year to date year on year as well, and we've got Chinese retail sales year on year. So what we need to established really, and then very early on Tuesday morning, we've got the monetary policy meeting minutes from the Australian dollar, which is obviously the meeting regarding them keeping rates on hold in the previous meeting. So we do want to hear what they've got to say regarding that as well, and any sort of outlook or forward guidance to how the Australian economy is doing. Now, what we've seen recently is we've seen an uptick in employment. It was expected to come in slightly weaker, and it didn't. It came in slightly better, which was great news for the Aussie dollar. But the Chinese data that's been coming out poor, particularly imports and exports, has really been weighing on that Aussie dollar, which is what's brought it back down. It hasn't broken below the 7.2 area yet, but the markets are still open, so it could possibly do that before the end of Friday. But if it holds above that 7.2, then we could actually be looking to rebuy it again. We'd just be having a look to see. Really, it's going to depend on this data that comes out the weekend. We've got to see that come out first. Then we can make assumptions on where we can take it from there. Okay, so moving on, the pound CPI data we've got coming in on Tuesday. This is actually expected to have a slight uptick to 0.1% from minus 0.1%. This would give the pound a little bit of a boost and a bit of a rally possibly at the start of the week. And then later on, we've got Tuesday, we've got the US dollar, we've got CPI data coming out in the US, which is expected to take a bit of a downtick month on month as well. And core CPI, which is expected to remain the same. These are all very important figures, although they may not move the market in their entirety. To start with, what it's going to do is give a very sort of a good impression of what's going to happen after this FOMC rate hike. I think everyone's expecting this rate hike purely because the Federal Reserve have got to save face by doing something. We've been talking about it for so long that they really need to sort of keep their credibility by actually raising rates. It doesn't necessarily mean that they won't reverse that decision in 2016. In fact, a lot of analysts are expecting just that to happen. But we're just going to have to wait and see. But we can only play it by the data that we have and what we can lead into. So again, like I said, looking at scalping positions on the lead up to that. So Aussie dollar being one will be the earliest one that we can take really on the Tuesday morning, and then we'll be looking at CPI. The pound, because we're going to be looking at slightly better CPI on the pound and slightly weaker CPI on the US dollar, we could maybe get into the pound just before the FOMC meeting and take advantage of that. We've got a nice we've made a new high here and broken out of this this low level. We've made a higher low and then we've made a higher high, so we are kind of looking like the upside could tick higher on the pound over the next couple of weeks, and especially if things start to rally or people start to sell off the US dollar after the rate hike, then the pound will probably be quite a beneficiary of that, even though the data hasn't been that good at the moment. The employment and the wage growth now starting to come to a bit of a plateau. It could be a little bit sort of lackluster in volatility. So expect possible spikes down to 1.5 on the rate hike, and then maybe look to rebuy it from there. But we just have to see again what happens to that FOMC. It's very important that we get that information before we start taking trades. Quite a lot of data out on the PMIs coming out on the euro as well. These are expected to come in sort of a little bit mixed. A lot of just a few ticks down on some of them, or some of them expected to come in as expected, or as previous. Sorry, we've got the flash manufacturing PMI, German flash services PMI, flash manufacturing PMI. These are all very important figures to keep an eye open for to see if there is being improvement in the European or in the Eurozone, because if there isn't, then obviously it's going to put pressure on the ECB to actually announce that further QE in the new year, in the spring announcement. So these are all things that are possibly going to bring the euro back down again next week. So again, we need to keep an eye on that. So Wednesday being the big one, we've got the FOMC statement, the federal funds rate, and that's where we're going to really look to take position. So let's have a look at the charts and see what we can see happening. If the euro, we're still bearish on the euro overall, but it doesn't necessarily mean that we're not going to see further upside before we sell off again. You can see this square here that I've marked up. This is my sell zone. So I'm looking really to sort of resell the euro once it gets back into this zone. Ideally, the perfect price would be back up at the 113.50, the 114.50 price over the next few weeks, and then to sell off again. We're still looking for parity on the euro. Nothing has really changed there. It's very hard to see at the moment because of this this rallying that we've got going on. But in fact, we are still very much looking for that over the coming months. If not in the first couple of months of January. Now, this is one of the currencies that we can sort of kind of have that confidence in, that it is going to sell off against the US dollar even after the interest rate hike. Although, like I said, we could get a spike up just after. Now, the pound, we could be looking in the opposite direction to the pound. We could be looking for that spike, as I suggested, down to the 1.1500 level, and then looking to rebuy it. It may even spike down to 148 or even 144. So we're going to have to be careful, and we're just going to try and have to play it after. Really, the best thing to do is let the market settle down after we've had that rate hike on Wednesday, and then take it from there. If the Fed don't raise rates, which is fairly unlikely at this stage, but if they don't, then we are almost certainly going to see these major currencies rally up, such as the Aussie, the Euro, the Pound. The Japanese, US dollar, Japanese yen will obviously sell off. Now the US dollar, Japanese yen, this is another one. Now the yen has started to show some strength now that they've come out of the technical recession that they were talking about. So, you know, quite in depth about a couple of months ago. We were almost certain that the BOJ were going to announce further QE, and in fact they've refrained from that and have suggested since that things are improving and they are on in line for their target inflation next year. So we are looking for this to sell off now. I was hoping to get, as you can see, my analysis on here. If I put this, if I scrunch this up, you can see what I'm looking at over the coming year. On the US dollar yen, I was hoping to get a spike up to this 125 area where I could take the best price sell position. Now this again may still happen on that FOMC meeting. That's going to be my last chance to get that price, and then I think we're going to see Japanese yen strength throughout the end of this year and through 2016, 2017, and end up back at these sort of prices around about end of 2017. So looking to trade that down. Obviously these are periods of consolidation on that way down there, prime sort of target areas that we've had. So on the long term, and this will be in our Christmas analysis or end of the year analysis, all the targets that we're looking at in the new year. But for now, we are just going to have to be a little bit careful this FOMC meeting. I'm going to be looking to hopefully get a spike up. It might not make 125, but maybe 123, 124, where we can resell it. As long as we have a stop loss above that 126 area, then we should be good to hold positions through over the next coming months. That's really all I've got for you at the moment. Like I say, we've got to be a little bit careful with the FOMC meeting. We're going to have to see that play out, and then we can start to be a little bit more assertive with our trading analysis. Okay, thanks for watching. I hope you can make some pips.